What's up, YouTube? It's Joe Catchpaulia sitting on the couch, making some money investing in fractional real estate online, as usual. Today we're going to do the due diligence go over my due diligence. Obviously, you want to do your own. But for the Lofty's newest property, it is a sale leaseback type transaction that is eventually going to be a long-term rental, or that's the plan. 4-bedroom, 3 bathrooms, almost 3,000 square feet in Dallas, Texas, with a pool, with a man-made pond that's potentially connected to a lake, but I'm not completely certain, or to a man-made lake, you could call it that. But that seems to go through the neighborhood. I'm going to go into all the normal things on this. One of the things that is always fun about Lofty is, it's a platform where co-owners and people bringing properties to the platform can be creative. And so it's always fun to see the way that that's created some new risks that maybe they didn't intend, or maybe they did intend, right? Maybe it's being passed off to investors, and not they being Lofty, but they being the co-owner bringing the property to the platform. But, we've got some promises being made on this that I don't see any documentation that that commits the co-owner to going, moving forward on a lot of these promises. So we'll get into that in a little bit. First, wanted to talk about the market like we always do. It's in Dallas. Dallas is a market I like a lot. Always like to look at the historical, population data. You've had strong growth. You can see they had a little bit of a blip, between the 2000 and 2010. It was strong the past decade, and then it's been strong again. The market as a whole, though, which I'll show you in a minute, hasn't really. So this change is more, I believe, shifting from the city to the suburbs. Reflects preferences there than it is like the market as a whole. Because when we look at the actual MSA, which is, this is the data for the the Dallas-Fort Worth Metroplex. And you can see, even through that time, it's just been super strong growth the whole time. So sometimes it's important to look at the whole context, right? Like it looks like, Dallas really struggled. And yes, within the city, they didn't have the same growth there. But in the market as a whole, they were still growing. And so, I don't know. I really like this market because of that, right? They're strong. There's a lot of reasons that there's going to be increased demand for housing, and that's the number one thing that I look for, right? Obviously, that's looking at the supply side. There's going to be the demand side, there's going to be some supply issues, right? Like whether or not they can build it, there's plenty of room to build. If you really look at Dallas, people are going really far out now, building new stuff. There's, I think I'm not sure if we looked at it on here or not, but that property on Arc 7 all the way out, and I think it's Forney. It's a Dallas submarket, but it's pretty far out there. And there's a whole bunch of markets like that, right? So I think when you're looking at, okay, we've got the increased demand and we're within, within the city. So I think you have a little bit more supply constraint there. So a lot of reasons to like it from that point of view. At least, that's the type of stuff I like to see. If you think about, does this look like it's more, more like the average market of a property on Lofty or on Mogul, which you guys know is my favorite place at the moment. Obviously, this one looks, it's a market that you'd see on Mogul more often than on Lofty, right? Most of the Lofty market that we see are in places that have, usually when I'm doing these due diligence videos, we don't see great population growth in the area. So glad to see them onboarding something here in Dallas, or not here, I'm not here, but in Dallas. I looked at the zip code, the Zillow home price trends, very strong 1-year number, right? Up 3.6%. The median price point is over $1 million. And when you look at this trend, a lot of the times we've looked at this trend line and it really, it hasn't crossed over the 2022 peak, but here we're well above it, right? So, you've seen strong performance in this market, although the 1-year forecast is only 0.1%. One of the things that, Dallas has worked I don't know if you guys have heard this, they call it Y'all Street, right? They've worked really hard to become as opposed to Wall Street, it's Y'all Street. They've worked to become like the second financial center in the country. Whether or not that's really worked for them or not, it seems to, right? They've attracted a lot of different financial services, a lot of bank headquarters, different stuff like that. There's quite a few private equity firms and whatnot. And I think during good times that does very well for them. Most of that growth, I feel like, well, I'm telling you, I feel like, because I really don't know this for sure, but it seems to me that most of that happened after the last crash. I don't really know, even though I spent some time in Dallas right around that time, I don't know how much that push towards being, the second financial center in the country, how much that story had already played out then. But going forward in the future, it'll be interesting to see, does that change the way, the market reacts to recessions there? That's one of the questions I've had about about Dallas. Part of the reason that I didn't choose that market when I decided, when I moved to San Antonio, I looked at a whole bunch of different markets, real estate being one of the major drivers of my decision. And, it was a market I passed up, but still very happy to invest in it. Get some of the easy stuff out of the way and start closing these. So, check the FEMA flood map. Oh, great. That's not loading. All right. I got that fixed. I just had this open for too long and it had hung up and it actually made my whole thing have a problem. So anyway, you can tell probably from looking at this, does not look like we're anywhere near a flood zone. You can see, all these water features here. It looks to me like this is all man-made. I'm not sure. We do have one picture of this, that's here. And then I found, and I'll show you the map in a little while, but I found on the map where it makes it look like this is connected to the other little ponds. The other ones actually seem to be a bit bigger in the neighborhood, but I'll get back to that one in a little bit. But so the flood map looked good to me. The crime map, probably going to have the same problem because I loaded this like an hour ago. This goes back over a month. Let's delete that. And so, and it had to go give us a pretty wide area, right? Like we have nothing in the immediate neighborhood. You've got a couple of burglaries here, and that's what these typically are. I think these are usually thefts. Yeah. But overall, look pretty solid. I was happy with what this crime map looked like. This one actually surprised me. I don't remember. Oh man, all of these have just disappeared. Hopefully my recording's actually happening. This would be really terrible if I... okay, let's see. Let's put that back in there and see how this goes. This is the level of professionalism you've come to know and expect from me, right? So, but yeah, let's see. Okay, we're on the annual expected loss. I don't know why the map is not... Oh, all right. Well, but the data that I want is this stuff on the side anyway. This is one of the highest risk markets that we've looked at from this type of perspective. Partially it's because of the density, right? Because when you look at the amount of risk, expected annual loss has a lot to do with, okay, well, how much value is in that area that could be lost? But there's also a lot of really high scores. So like cold wave, we had a very high score there. Earthquake, not super high, 91. Hail, 100%. That seems to be true in a lot of the, it's pretty true here as well. Heat wave, very close to 100%. Relatively low hurricane. Ice storm, relatively low. Landslide, well, is that, they call that, relatively low. Historic loss ratio, very low. Landslides, not terrible. Lightning was up there. There was one that really surprised me. Strong wind. Oh yeah, tornadoes pretty high too. And then winter weather was higher than I expected. That's what it was. Anyway, if this is something you're very worried about, you obviously want to look into it. For me, most of this stuff is stuff that I'm going to be comfortable with, as long as we make sure that our insurance is up to date. But it was, it's very noteworthy how much higher a lot of these numbers were. Oh, this is where risk index yeah, no, it's the same thing. Okay, there we go. I'm going to close that too. You can tell I'm having all kinds of problems with my laptop today. Little things popping up and distracting me while I'm trying to talk. Okay. Couple of things. So what are, I talked about there's some new risks. So one of the things that they're doing, okay, they're selling the equity to us, right? Selling tokens. Renting the property back. We have a 2-year lease from the co-owner, although it says he plans to move out in 7 months once there's some renovations completed. The renovations aren't really all outlined exactly what they're doing. I mean, I guess they're listed, but not exactly, we don't know. So like, okay, we're going to bathroom updates, including fixtures. Well, when we look at some of the comps, it's going to be important to understand why I'm concerned about this, right? HVAC servicing and tune-up. This one's, we'll talk about why I think that's a little bit, maybe not really getting us where we need to. But so one thing that I did really like that they did though, is so after, there is an inspection, and you can go through the inspection. It's very long. There's like 70 pages, 70 plus pages. But he listed a lot of the things that have already been addressed since then. And then some of the things that they're planning to do in the future. One of the things, where does it? Yeah. Licensed trades are scheduled for foundation documentation, which I'm curious what that means, because when we look at the, they basically said, okay, see all these readings from zip level. This is like how far up or down, so 0.7 inches off, 0.2 inches off. None of those are terribly scary to me. I felt like I saw some other ones though that were larger, 0.6, 0.8, 0.9, 0.7. I think he's doing them in each room. Yeah, 1.3 inches, 1.1 inches. So this is how, how much different they are from each other, basically. And he just had a note that it needs to be assessed by a foundation professional. There are signs of, cracking in the drywall. So signs of foundation issues, right? Cracking in the tile in the master bathroom, whether or not that's what the problem is or not. The inspector said, okay, well, we need someone to come take a look at it. Well, so saying, okay, we're going to have someone out to document it is not the same thing as saying that they're going to fix it, right? And so one of the problems that I have with this listing is there's no document that I've seen that requires the co-owner to do any specific repairs, right? Let's say we buy a bunch of this equity, right? We buy tokens. And then, the foundation inspection comes through, and yes, there's a $60,000 repair. Now, the co-owner is currently paying for the repairs and maintenance. That's what the listing page says. Did the lease actually say it? But like, if the only place where it says that is in the lease, I don't even remember seeing it in the lease. Let's look at the lease here. Repairs. The landlord shall be responsible for structural repairs. See, that's not good, right? Like, if there's an issue with the foundation, is that really going to be our job to fix that? So like, the lease doesn't have a list of all the stuff that they're going to do. So, for example, if I were going to do this transaction and set it up in a way that I thought it was investable, for me personally, I'd want to have, a scope of work for each of these things, right? Okay, roof repairs and patching, it's pretty vague, but that's one that I actually think is, you get a roofer out there, you say, okay, what needs to actually be repaired? All right, I get that. Like exterior paint, touch-ups, and basic landscaping. Like, okay, what are we counting there? What are we actually doing? Full interior paint. Okay, that's pretty good, but are we doing, you can paint your walls, ceilings, and trim all one color, and that's a lot cheaper than if you're going, 2-tone or 3-tone, different ceiling color, different wall color, trims, doing your trims different. you're actually, it's considerably different cost. Flooring replacements, like what are we doing? The same as exact stuff? Is it just the same tile? Are we, we're just going to put LVP over all the flooring? Like there's levels to this, right? And one of the things I haven't mentioned yet is they're proposing that this is going to lease for $12,500 a month. And sure, right now the co-owner has signed a lease for $12,500 a month. But is someone in the future going to pay that much? It's going to come down to, well, what does this really look like on the inside, right? One of the things is, they're saying HVAC servicing and tune-up is something they're going to do. Well, it's an 11-year-old system. It's what I maybe 11 or 12 years old based on when I looked through the inspection. I could be off a little bit on that, but to me, that's getting very close to time to replace it here, at least the exterior unit here in Texas, right? These things run all day, every day, and 10, 12, 14 years is when we replace them. So to just be like, oh yeah, I'm going to service it. Well, if I were buying this on my own, I'd expect that I'm going to be fixing that or replacing that in the next year or two. Excuse me. Let's see. So all that stuff, right? Like to just have this in the listing, we don't have some document that I've found that would allow us to enforce this, right? To force the co-owner to do this in any way. And that's what we've seen sort of in some of these other listings, right? Where the listing page will say something, oh, this is going to happen. Like, for example, that's where we saw the rent credits for Brownfield. Like it said on the page, oh, he's going to pay a rent credit. But, okay, we weren't able to enforce that, right? There was no, once it just shut off, there was no real enforcement mechanism because we didn't have a contract somewhere that said, this is what you have to do. And if not, this is what our recourse is. Or if we did, nobody went to that document. But I don't think that we did. I think that a lot of times we're kind of just counting on, okay, what did we see in this listing page? And as users on Lofty, we should be able to see what they put here and assume that there's some enforcement mechanism, right? Like, why would you tell me as an investor, oh, well, these things are going to be completed, and then, well, maybe they're not really. Well, the reason is because the co-owners actually get to just do these pages now, right? So when we go through this, just have to keep that in mind. Just because these are planned renovations, if we don't have something that's requiring it, I don't know what we do. Or if the work is done in poorly, I think that's problematic as well. Let me get into the valuation though. So because I'm going to point out a few things that will make it, I think, a little bit more clear why I'm worried about this. Okay, let's see. It's really the rental rates that I'm worried about, right? So the rent estimate from Zillow says it's only going to rent for $7,000, right? That's more than $5,000 less than what we're proposing. Let's see, where is the other thing that I was looking at? Yeah, Rentometer. It shows the median in this market, 9,000. You get up to the 75th percentile, and you do get to $12,000. Is this home a 75th percentile home, right? And that's what, when we look at the comps, and at the moment, there's only 3 properties listed for this amount, for anywhere close to this, right? I did, $10,000 to $15,000. This sort of brackets the price that we're at. Well, let's look at this home that's rented for $12,000. Now, it's in the same zip code. I realize it's not the same exact neighborhood or anything like that, and so that's going to have some impact. But the other thing is, okay, what are people expecting in this price point? And this one's only $10,000 a month, right? Not $12,500. Well, this home, we look at the exterior of the home that we're talking about. I don't think that there's that much difference on the outside. Okay, the pool and a hot tub. We've got this comp. We've got a pool. Is there a hot tub? I think it is right here. So okay, so far so good. One of the things though, this property is over 1,000 square feet larger, right? So over a third larger than the property, than the subject property. yeah, I think the exterior front doors, obviously this is a little bit higher end, but when you really get into this property is when you can see, okay, wait a minute, are these similar quality, right? Like you've got, um, okay, that's your entrance into that property. I mean, this is the one thing that we have going for us here, that, okay, how much is this really adding in value? It's very tough to say. This is what I think you're going to have to use some judgment, right? Because we just don't know. There's not a bunch of comps. When we go into the actual valuation too, you'll see the appraiser had something to say about that. But okay, you have to ignore the clutter, right? But just really try to look at this home, and does this, do the finishes in this home look to be similar to the finishes in this home with the comps, right? I mean, you'll see all throughout there's going to be tile accent walls, what appear to be, you've got the herringbone pattern wood floors in some spots. You've got, whether this is real hardwood or laminate, I don't know, but you can see all throughout they've done the tile accents. In my mind, just looks like a much higher end home than our subject property right now, right? And this is why I'm saying, like, okay, they're going to do a paint, they're going to do a renovation. What is that actually going to look like, right? Are we going to bring it up to this? Remember, this is the cheapest comp on the list. Is it going to come, is this the level that it's going to look like now? Okay, maybe we hate this backsplash. I don't know. This is not, I think these are actually pieces of broken plates and cups and whatnot that were used there. So that's not going to be everybody's cup of tea. No pun intended there. But so maybe kitchens are pretty, maybe that's a wash. But let's go, I want to show you the bathrooms, because the bathroom updates are one, kitchens and bathrooms. So homes, I don't know if, I think that's pretty obvious. Most people know that. Okay, this is, it's a little dated with the mirror there, right? But okay, let's look at that bathroom. And then let's find, now we're looking at the subject property again. I mean, it's tough, right? This is a lived-in home. I don't know what's going on here. This kind of stuff, I think it's that the fridge is taller than it's supposed to be for that. It's not tall enough that you don't need that panel, but it's not short enough that that sits flush. But let's see, I wanted to, okay. And then, I can see why we need the whole house paint, right? Because we have some very, but yes, okay, look at this bathroom. This is a very old school tile backsplash and counter. I'm not paying the same as I'm paying to rent this house, right, as I am for a house with this bathroom. But let's keep going, because that's not the only one. Okay, this is the master bath, I think. Let's see, I think that's what this one is, right? And okay, so again, we've got a bunch of mirrors. Maybe that dates this a little bit, but I think the overall, like, quality of finishes, this is another one, right? You can see, okay, we've got tile everywhere. This just looks much higher end than this, right? To me, these are not comparable as far as, okay, yeah, they just are not the same, right? And so if we're going to do a renovation, are we bringing it up to the level of this comp, right? That's a question. Now, that's the cheapest comp. Let's look at some of the other ones, though. Okay, this is the one that is the most similar in price. Oh, wait. Yeah, most similar in price and most similar in size. Remember that one we looked at a second ago is 1,800 square feet bigger, right? So it's significantly larger, less money. Okay, it's not exactly the same area, but we're in the same zip code. So, and remember, this is not an exact science, right? When we're doing comps, it is, what is someone going to be willing to pay? Are they a little bit closer to something in one spot than the other that it's worth it to them? I think it's possible. But again, if you just look through these pictures, like, is this home, are these the same level of home, right? And it just, at the moment, to me, the type of flooring is higher end. This is definitely the nicest kitchen of the three that we've looked at so far. Got a nice laundry room. It is, again, you have to look past all the clutter and the fact that this is lived in, because, for the next tenant, hopefully it's not like that. once they go to list it. But they just, I mean, it does not appear to be a similar quality as this comp either. I want to get to the bathrooms, right? I mean, this is like ridiculously, like much nicer, more high end. If you've got the copper sinks, these are not are we going to, when we update the bathrooms, right? Kitchen updates, including, bathroom updates, like I need a scope of work, right? Are we going to make it look like these comps? Like if we are, okay, well, maybe we've got a shot at it. Now, the other thing too is you have to remember, I'm just looking at asking rents, right? Nobody's actually rented these yet. I don't have access to these rentals in the same way that I would, that you do with sold properties. Some of these you will find on the MLS, so I guess I could go back and look and see, but a lot of them that you won't. And then so this highest end one, again, 800 square feet bigger, and just it's just not similar at all to what we're currently working with. And so when we say, okay, we're going to update it, well, are we doing a $100,000 renovation to this home, or are we doing let's get to this bathroom. You have very, just much nicer looking. And this one is actually, interestingly, where it's even, the most expensive. It's the least like in your face high end, but you have, anytime, you have the marble accent walls and whatnot. I'm not marble, the tile accent walls and whatnot. It's usually just indicative of the higher price point, right? So that's what bothers me about this, is we don't really know what updating bathrooms are, what updating kitchens mean. And so it makes it really tough to know, are we going to get to the level of these rental comps? Okay, we'll get back to that when we do the math for the rentals, but a couple other things. Now I jumped to the wrong spot in the lease agreement. A couple of things that bothered me about this. I still have this search thing going. Let's stop that. All right, let's see. So, non-payment. In the event that the tenant fails to pay the rent due under the lease for 2 months, then we can provide written notice of a default and give them 30 days to vacate. That's weird to me, right? That's a really long grace period to before we can give them a notice to vacate. So I don't know why they're doing that, right? This is longer than I would expect. I haven't done a deal in Dallas in a really long time, so maybe there's some city ordinance that gives greater protections, though. I doubt that, but it's possible. I mean, maybe I just don't know about that. But that, I'm gonna give this notice if I'm, past my 5 or 10 day grace period. Typically, like I'm not giving I'm not gonna wait for someone to be 2 months late. So that bothered me a little bit. And then they do have a little bit of a description about, having the ability. Let's see, is it here? Yeah, having the ability to take back tokens, to reclaim tokens or equivalent value to offset outstanding balance owed by tenants. So from their Lofty wallet. So presumably this means if they haven't paid the rent, Lofty can take tokens back to, and count that as rent. But are we doing that at the current market rate? I'd like it to be really clear what we're doing here, if that's what we're doing. And then at the same time, like, okay, I don't really care if I can keep taking tokens if I've got a tenant in there who is not paying rent, right? Like, yes, there's like, we can go ahead and sell the property and eventually get value from it, but I don't want that to be the main way. And I guess it's not the main way because I can try to evict them too, but it is, I don't know. I'd like this to be a lot better defined if this is going to really give me some more comfort, right? Like, because I think there could be a really good faith argument on the side of the tenant that says, no, I sold these for $50. You can reclaim them at a $50 value, even though it might be sometime in the future where, the market price is $25, right? So I don't know. I think that this could really be cleared up in a lot more helpful than that. Let's see the appraisal. We didn't really get into the valuation yet. Okay, opinion of value 1.725 million. But he's got a note in here that I thought, and let's see. I don't even know. Again, we're doing the same thing, right? Where it's not the DAO, that's the client. I think I've beat that to death. I guess they just don't really care to fix that. I'm not really sure why they keep doing it that way, but that's what they're doing. So, I don't like it at all. Let's see. Somewhere, oh man. Yeah, this property was a very difficult assignment due to the unique nature of the subdivision and the neighborhood and specialized water and amenity on the site. And so he's basically saying like, yeah, I did my best, but we didn't have real comps, right? And so, that's why a lot of times appraisal is just as much as art as it is a science, because it isn't, it's not as if you have a whole bunch of properties just like this one that you can point to. You basically have this subdivision, right? And some of them have much bigger pieces or much bigger of these man-made lakes. You really can barely tell, but I think this is the little thing here that you see the picture of. But when you shut this off, it just looks like this. And these little connections, I think this is actually all connected, and these are just like a terrible, not a very useful way to look at it. I'm not 100% certain of that. This is a property that if I wanted to sell this, you need drone footage, right? You need somebody out here who you have to give you a really good understanding of what this property is, right? I mean, this is, if I were this co-owner and I wanted to sell it, I mean I'd have a video, have drone video footage that just really gets you there. Because I don't know how much work let me go back to here. I don't know how much work this little pond is doing, right? I mean, this isn't adding an incredible amount of value. What am I doing with it other than just looking at it? Now, if this is something I can put a little kayak on and, paddle around to all these spots, which I think it may be, but I don't know that for sure. I think that's a very different amenity than if it's just, okay, I've got this little bit of water in my backyard, but I already had a pool anyway, right? And then the other question I'm curious about is, okay, if these are all interconnected, who's maintaining these, right? Or is it the individual homeowners? Is it the HOA? I found that there was an HOA that seems to be, in place, but I couldn't find the actual HOA amount. A lot of times you can see it on Zillow or Realtor. I couldn't find it. It's something it wasn't listed in the financials section. Because at the moment, the co-owner saying, oh, well, they're paying everything, right? So all we see is the gross rental rate minus the DAO fee. So, I mean, that's why, and then they're telling us it's a 6.4 cap. I mean, it's hard to just not laugh about that, saying, that's how this deal is, right? But I don't know. I mean, that if you've watched any of my other videos, I just don't like how they do any of this, right? I mean, it's just not a very realistic look at this, especially because that co-owner is not planning to stay in the property forever. He's going to lease it out to a new tenant. And then what's very unclear is when he does that, is he still responsible for the repairs and maintenance and everything? The HOA fees and all that? I mean, I have no idea, right? And it's not really clear from reading the listing how that's going to work. So, so I think that's, all that stuff, if it were outlined a little bit more, maybe I'd feel better about it. But yes, okay. So, but that's how we get to the 1.725 value, right? He said, okay, I basically doing the best I can. We had some comps that had some water influence, he's calling it, but most that didn't. When you look on Zillow thinks it's only 1.666. That's let's go back let's just close that. And then Realtor thinks it's even under 1.6. Redfin, I think, 1.735. So Redfin thinks it's doing a little bit better. Right? And that's actually, it's actually a little bit higher. So I don't know that we're too far off, but remember, they took that number and inflated it by 5% to get to the underlying asset price that is being brought to the platform on. So assuming that number is correct, we're already paying 5% more than that. But, based on 2 out of the 3, it seems to be a little bit on the high side. And, the appraiser himself, he's not too sure, right? He doesn't really know because this was a tough assignment. And I think it's perfectly fair, right? And one of the things, it's really nice to have a unique property in a market that's going really well, because then you can kind of set your price on the high side. But it's really terrible to have a unique property when things are not going well, because you're not going to get the benefit of the doubt on the high side. People are normally going to come in low, closer to what, the more ho-hum properties are going to be. So, you kind of have both sides of that. All right, let's see. We already talked about, the rental rate. Oh, yeah. So I want to do some math around that, right? If we're assuming that this 12,500 is correct, right? Like, okay, let's say that is the market rental rate, right? And then I'm just going to normalize this, just like I was underwriting it, as if, okay, the co-owner disappears and we have to run this property as is. Okay, I'm going to use a 5% vacancy collection loss. That's just a random number, right? Maybe it should be higher, but I always want to have something. Gets us to our net rent. Charging a 10% management fee. It's probably high, right? We probably could change that. They provided, this is going to be managed by Marble, and this is like $65 per month per unit, plus a leasing fee. I mean, I think we've all seen how some different platforms can, work like that, or maybe aren't great. I think probably to make this a little fair, because it is such a high rental rate, we can go a little bit lower, right? I think you can find an actual full service property manager somewhere in the 6 or 7%. And let's go to 7. Because of how, assuming you get this really high rental rate. And then, taxes and insurance, I actually just took the number, their escrow payment from the loan doc. I'm assuming that that's right. Obviously, if you're going to put a lot of money into this, you don't want to assume that. Let's get rid of this comp here too, and get rid of that. All right, and let's get rid of that also. All right, let's get back here. So that's $2,000 a month, which brings us to an NOI of $8,392, which puts this at about a 5.56 cap. So, best case scenario, right? If we are actually getting the gross rent that they say we are, we're at 5.56 is about the cap rate. Like if you're looking for long-term rentals here in San Antonio, you can find them right around that price point. That's actually pretty good, right? Cap rate wise, assuming that number's correct. I don't think it's correct though in the current condition, right? So we have to count on the homeowner or the co-owner bringing that property up to the level of those comps that we looked at, and then that those comps are actually, one of the things, maybe we need a much higher vacancy collection loss to account for the fact that it's a unique property and it's a high-end property, and it's probably going to take a little bit longer to rent. But anyway, and then with the current loan, after we take out the principal and interest payment, we've got a cash-on-cash return of 5.32%. Is that right? Let me see. Because we have such a big, let me just double check that. Dividing it by the equity, right? Yep, okay. And it's because, we have relatively low leverage. And so that's a good thing, right? We have under $700,000 in leverage on our $1.8 million purchase price. Really, that even though that's our price, it's $1.7 million valuation, it's still relatively low leverage. But so 5.32% cash on cash return. But now let's say, what if Zillow's right? What if the let's even give them the benefit of the doubt and say, okay, what if we're getting $7,500 a month? Okay, all of a sudden it's a 2.5 cap, and our cash on cash return is 0.96%. You know, I'm not very excited about those numbers whatsoever. And so, you have to decide, like, okay, is it 10,000, right? Do we get up to the cheapest comp we saw on those rentals? Okay, well then we're talking about a 4 cap and 3% cash on cash. These are just not very exciting numbers, right? So you have to get to that 12,500 for it to even, to be on the low end of something that's a little bit interesting. Now, at least in all of these scenarios, it is covering the debt, right? Because it's a very low, because we have a relatively low debt amount. So that's good, right? Because one of the things I'm always worried about is what happens if the co-owner can't make that payment for some reason? What happens if they just decide not to? What happens if they disappear? All different things could happen. So the real risk for us for this one is, is the co-owner going to do the renovation and spend the money to bring the property to the level that it needs to be, to actually get to that 12,500? Once it gets there, once we are leasing it out to the new person, are there expenses that we don't know of, right? Like, I believe there's a HOA. You might have a really high HOA fee here if that's who's responsible for maintaining the waterway. If it's you that's doing it, okay, well then we probably need to, if it's us as the DAO, then we probably need to increase our repairs and maintenance, right? So that's an unknown. And then, we have the regular risk that we have with these leasebacks of, okay, they actually gave us, quite a bit of information about this guy, the co-owner, Samir. And we have a link to his LinkedIn, but he does have the open for work hashtag, right? Seeking a remote opportunity. It looks like he's got 3 current jobs, and it looks like it from here too. But so that always worries me a little bit, right? Like, is it just he's willing to take on more work than what he's currently doing? Or, is he unhappy with his current job? Like, I mean, I don't know. If I'm leasing a property to somebody and I know they're thinking about leaving their job, that's worrisome for me. So it is always, we just have very little bit information to go off of. And so we have to use whatever we're provided. Obviously read everything you can. One of the things I know I've mentioned it every single time, but especially when we're leasing to the co-owner. And so, we're expecting a $12,500 a month payment from them. I'd really like to know what their finances look like, right? When I'm leasing a property to a tenant, I know, I want to have 3 times, that the rent is their income is 3 times the amount of the rent. So, sometimes it's something different than that. In some markets, it's as much as 5. Some places it's 2.5 or, even lower. Here I'd probably want 3 would be my guess, but I don't, we don't have any idea about their income. Usually they give us a credit score. Do we not have a credit score? Nothing about a credit score. And do we not even have... Usually they say something about the background check too. So those are all questions that I'd want to ask and have answered before investing in this property. And then really, for me to be excited about it, I would want to know the actual scope of work, the type of materials, the type of fixtures being chosen, what their vision is, right? Like, is it going to look like those comps? Or is it just going to be like, we did sort of a generic residential renovation that you do on a regular rental? Because this is, $12,500 a month. It's not a regular rental rate, right? I mean, it's in that area. It's a 75th percentile rental, and that's already a very high, a higher end area. So I don't know. For me, and so okay, that 13% yield that they currently have, well, that's while the current tenant is in there. Oh, and that's, and this yield that I calculated, just to make sure that's clear, I'm talking about if it's a cash on cash return, as if, if we had to take over and make the payments, right? This is what I'm always trying to normalize the deal, see how the deal looks fundamentally. Like, yes, if you hit that number and, so we get a tenant in there and we're underwriting it without, where the co-owner is still paying the principal and interest payment. Well, then, I'd expect our yield to get almost to 9%, right? Where currently it's 13, but once there's a different tenant in there and the expense structure changes, then that goes down even further. I don't know. For me, this is just not a very exciting deal. I mean, it's not, it's not particularly high yielding for a Lofty property. If I thought that I was going to continually get a 13% yield on a property set up like this, it would be a lot more interesting, right? And they do say, okay, there will be a DAO vote to lease it to the new people. And so until the new lease is signed, for 2 years at least, we should be getting this structure. And so presumably we're not going to vote to lease it to somebody new unless our numbers should improve based on that lease, right? Which, in order for that to happen, I don't know, the co-owner either has to still eat some of the expenses on top of the mortgage. I don't know. I don't like, I mean, you guys can tell I don't really like this one because it is, it's just more uncertainty than usual because of this. Now, like I said, I do like that they said, okay, we completed these things. Like, that's great. Like, I always want to know after the inspection, what did you actually fix? They gave me the list of that and all the other things that they plan to have, they have people scheduled to come out and do. But then, what's actually going to get done with those is what I'm, just having a problem with. I have forgotten until the end, but please like and subscribe. In the description of this video, I have links to all the places where I'm currently invested in fractional real estate online. Please do your own due diligence on any of those links before you use them. As far as, the platforms themselves, the properties, just because I'm invested in something doesn't mean that you should. I mean, I do have a link to Lofty. I do have money on Lofty. I don't highly recommend them whatsoever. I think that there's money to be made if you really are digging, trying to find the best deals, willing to be in and out of deals quickly if you have to be, willing to be active as far as, proposing votes and solutions and whatnot, sometimes even having to lend your own money to the DAO to make things work, or somebody has to. So, there's opportunities, but you definitely need to, figure out, is it a deal for you? Just because I'm buying into something doesn't mean that you should. Also, in the description to this video, there's a link to the Discord I have set up. Please feel free to join that. We have a lot of good discussions about every property that I cover on here and all the different platforms. If you are going to buy this one, I'm super curious to hear from you. Feel free to put it in the comments, put it in the or jump in the Discord and talk about it. What's got you excited about this one? And then if you're not, feel free to share why not too. If it's a reason that I didn't come up with, I always love to hear new stuff. And then, as always, if you see me messing something up, let me know, right? Like, I really don't know what's going on with this. I believe that, if you go this way or that way, it's connecting to the neighbor's little pond, but I don't know that for sure. I think it makes it a much better amenity if that's true. If not, I mean, it's like you've got, I don't know. I'm just not really sure what's going on. In any case, until next time, I'm just going to keep making mistakes so that you don't have to.